Hello, I'm Councillor Jill Whitehead, Chair of the Pension Committee. I'd like to welcome councillors and members of the public to this first ever virtual meeting of the Pension Committee on the 10th of June 2020 at 7 p.m. The Vice Chair of this committee is Councillor Edward Joyce, and he will take over the chairing of this meeting should I lose connection at any point. We're using the technology we have available to ensure we can continue our work as councillors. We hope everything runs smoothly. Please be patient if we hit some challenges during the meeting. This meeting is being live streamed to YouTube. Before we move to our first item of business, I will conduct a roll call of members for the purpose of registering their attendance at the meeting. Please respond by confirming your name when called and stating whether you have a declaration of interest. I will now conduct the roll call. Please, could all members switch on their microphone and camera to confirm they are present and if they have any declarations of interest? And can they then switch off their microphone and camera when they're not talking? First of all, Councillor Edward Joyce.
Yeah, present.
Councillor Mohammed Sadiq. Can you unmute, Mohammed? Can you unmute, Mohammed?
Yes. Can you hear me now?
Yes, I can.
Yes, Councillor Mohammed Sadiq, nothing to declare.
Okay. Councillor Sam Weatherlake.
Present, no declaration of interest.
Councillor Eric Allen.
Present, no declaration of interest.
Councillor Prem Nanda.
Present, no declaration of interest.
Do we have any apologies for absence? I don't think we do.
No, we don't have any apologies for absence, Chair.
That's good. First of all, I would just like to say a few words before we start. I'd like to welcome Tamara Burnell to her first Pensions Committee as Head of Pensions, and to congratulate Lindsay Gamble, her predecessor, on her new appointment at Westminster Council. And I'd also like to welcome Councillor Mohammed Sadiq to his first meeting of the Pensions Committee. I'll now mention a few key points to help us have a successful meeting. Firstly, I'd like to remind members that we have some exempt meetings on the agenda. These will be taken at the end of the meeting after all the open items have been completed. These are the exempt appendices B and C at item 6 and item 10. At that point, I will move a motion to exclude members of the press and public from the meeting under the 1972 Local Government Act. I would like to bring to your attention the following points. When you're not speaking, please turn your camera and microphone off, as this saves bandwidth. I shall allow plenty of time for members to speak on items and shall make this very clear as we move through the agenda. So please only speak when I call on you to do so. When you speak, please turn your camera on. When you speak for the first time, please state your name clearly before you begin. Councillors should introduce themselves with their title and name. Officers should state their name and title. You only need to do this the first time. If you want to raise a point during the meeting, please use the chat box and type question, debate or point of order during the meeting. For example, when we come to questions for an item, I shall ask those who wish to contribute to simply type question, and I'll then invite those members to speak one by one. I'll monitor the chat box as the meeting progresses. If you wish to make a point of order or personal explanation, please do so in the same way, and I'll endeavour to move on to you once the person currently speaking has finished. Just one other point, when we had the planning committee recently, because that was extended, we had a 5-minute comfort break in the middle of this. I'm not expecting this meeting to be a long one, but if for any reason things do elongate and you feel there is a need for a 5-minute comfort break halfway through, then I'm sure we can arrange that when we come to it. Firstly, could we now move on to the minutes of the previous meeting? Members, can we approve the minutes of the previous meeting held on the 3rd of March 2020? I'll allow time for members to speak if they wish to raise any matters. If you're happy to accept these, please write yes in the chat box now. If members are happy with the minutes, please can you say yes? I've got 2 members so far.
Jill, I wasn't a member at that time, so I'm just gonna say
That's fine.
I agree with you.
That's fine. I should have said all members who were present at the time. Of course, Councillor Sadiq wasn't a member of the committee at the time, so everyone's happy with it. That's fine. So what I will do is I'll take the minutes as approved, and I'll sign these minutes outside of this virtual meeting after the social distancing restrictions are lifted. Can we now move on to item 5, which is Pensions Administration Update? This is pages 7 to 12 on the main agenda. And I'll ask the officer, Mr. David Kellon, to present this report. So if everyone else can mute and turn their camera off and to leave Mr. Kellon to speak.
Thank you very much, Chair. I'll just run through the summary of the pensions admin report, which is to the 30th of April. As you've got there, some issues around the COVID-19 response in terms and how it impacts us as a pensions team. Consistent with the government advice, the team is all working remotely at present and for the foreseeable future. And we do have 1 or 2 officers attending the Civic Centre once or twice a week just to deal with some of the physical incoming and team are all working remotely, and that seems to be progressing quite well. Around COVID-19, there have been some significant amount of guidance made available by the Local Government Association in the context of the Local Government Pension Scheme, which we've in turn made available to employers. We issued a frequently asked questions document to all employers that they could circulate to all of their employees. Likewise, it's been circulated around through Sutton itself, through the Insight and the intranet. Although we've anecdotally taken the view that COVID-19 in itself hasn't produced a lot more work from us, and I would maintain that view. Running some reports recently, there is an upturn in the number of death processes we've started for the period 1st of March to the 4th of June. Is an increase of about 20% on last year, which while significant, represents maybe 20 cases. And that's important to understand that that's across both boroughs that we carry out the administration for, both Sutton and Kingston. And whilst that is significant, it's not really big enough in number to make any real issue for us as an admin team in terms of us amending processes and so on. So we're coping with that situation fairly well. Around the monitoring complaints, there's not been any new IDRP cases, nor have there been any new cases referred to the Ombudsman. We have had 1 case that was with the Ombudsman that I've previously mentioned to the committee that came to a conclusion, and that was around a restriction on someone being able to carry out a transfer out from the fund once they were within 12 months of normal pension age. The Ombudsman's determination confirmed that the complaint was not upheld and that there was no further action required by Sutton. In terms of the valuation, we've issued valuation results to all of the scheme employers following the issue of the rates and adjustment certificate from Barnet Waddingham. That's all gone and confirmed the employer rates now to all of our scheme employers from April 2020 through to March 23. Annual returns, there was a deadline of the 7th of May for all fund employers to return their annual return no later than the 7th of May. At the time this was written, we had received 59 of 76 returns. We're now down to just 3 outstanding, so there were just 73 are in now with just 3 left. It's just as it says there, it's the first stage really for us to start processing that data, which ultimately is what enables us to produce annual benefit statements and pension savings statements later in the year. For those that were late in submitting their return, we will be issuing a fine in line with the pensions admin strategy, but that would just be to a very small number, like I say, less than a handful where that's been the case. Pensions increase was delivered to all our Sutton pensioners. So that was an annual increase of 1.7% or prorated where necessary. And that all went very well and was been applied to all pensioner records from April. The pensions administration software, we've continued to work very closely with Civica in developing and making the most of our system in order to achieve best efficiencies. And we're very close now to launching what we're terming as a drip tray distribution method of work, which, as opposed to what we're doing at the moment, where work is basically allocated within the team on an alpha split basis, this will actually be priority driven. And so members will just draw a piece of work from a central tray, which will prioritise those that are most urgent. We are anticipating that will be in place before the end of this month. So that will be positive in terms of addressing the most highest priority cases first. We have introduced a new procedure for the recovery of overpayments. Typically, although not exclusively, these are where a pensioner has passed away and we're either late in being notified of the death, or because of payroll deadlines and so on, even we've been informed in a timely manner, but there has still resulted in overpayment of pension. So that procedure has been changed, and we are mindful of obviously the sensitivities in those cases, but they should make that process a lot easier and require fewer payments to be written off. In terms of the key performance statistics, it's improved across all the priority levels, and that's despite the sort of interruption of COVID-19. I think in some areas we have found that working from home has actually made things rather more efficient than being in the office, but we have got those priority one cases relatively under control now, sitting at just over 90%. One of the things that we are conscious of and are making an effort now to address is the substantial backlog of lower priority cases, and we have a plan in place at the moment to do that, and we're looking to add some resource in order to address those. They're typically the notification of deferred benefits, although again not exclusively, but that's where kind of the bulk of the work resides. Just moving on to the numbers themselves then. So as I say, we've hit that target of, well, we're over the target of 80%, 88% for the month of April. It's slightly higher again for the month of May. The open processes that are at the end of April were down to 1,227, which is the lowest value they've been for, I think, for a period of over 12 months. That said, you know, that we're not relaxing, not taking our foot off the gas. There's still a lot to do there in terms of addressing particularly that lower priority case work, which, as I say, we're addressing at the moment. I won't dwell on the pensions online take-up numbers, although they seem to be staying fairly constant around the just over 34% there for active members. It will be something that will push hard on again come August when the annual benefit statements are issued. So that's the means by which members can access their annual benefit statements. So we'll do a piece of work again at that time to encourage members to sign up for that online system. You've got then the process details there broken down by priority level of 1, 2 and 3. So for the month of April, we're 88% on priority 1, 97 on priority 2, 65 on priority 3. As I say, it's not the lower levels, it's not where we want it to be, and we work hard to get that improved. You've got a breakdown there of what processes are outstanding by priority level. And I'm happy to take any questions that anyone might have on any of that information.
Yes, if you have any questions, could you write the questions in the chat column and I'll take you one by one. Yes, I see that Councillor Pramnanda has a question. Would you like to ask your question now, please? Please put on your microphone and your camera.
Thank you for it. Just my question, two of them are: how successful are we recovering from overpayment since we introduced the new software? And second one, are we be a little bit flexible with the schools, those who are not submit the annual return on time? Thank you.
Okay, in terms of the overpayment procedure, it's important to understand it's not new software. It's just a new approach, really. So, in terms of what was being done was that any ongoing pension entitlements were being debited with any overpayment in a death case for the deceased member. That I'm not sure is a proper way of going about things. So, it's rather being done now on an invoice to the estate of the deceased. It's only been introduced for less than a month, so we haven't had many cases of that type yet. I think we've had one, so it's probably a bit early for me to comment on how successful that has been, but I would anticipate it being a lot better than previously. In terms of the annual return reports, it's a difficult one in the sense that whilst I've got every sympathy with both schools and other fund employers, one of the problems that we've got is that the deadline for the production of the annual benefit statements hasn't changed, and I'm not anticipating that it will change, and we still need to make sure that we get that data processed by the 31st of August. So what we have done is we've tried to be as flexible as we can in where employers have raised any mitigating circumstances with us as to reasons why. If we've been able to, we've offered some support in order to get the annual return data in, but we have tried it as far as we possibly can to stick to that deadline to allow us enough time to run the sort of care evaluation process and then, as I say, produce those annual benefit statements in time for that 31st of August deadline. As I say, in terms of penalties issued, I think for Sutton we're probably looking at a maximum of 3, which may fall to just 2 employers. So we're very small numbers, but as I say, we're hesitant to perhaps extend the deadlines any further, just simply because we've still got to get all of that data processed for the annual benefit statements to be issued.
Do we have any other questions? I'll just keep an eye on the chat. If we don't, we can move to noting the report, because it's a very extensive and comprehensive report, so thank you for that, David. I don't see any other questions, so can we note the report? Can you put yes in the chat if you want to note the report? Councillor Sadiq, yes, thank you. Everyone's noted the report. So can we move on to the next item on the agenda, which is item 6, which is on page 13 of the agenda, and that's the quarterly investment performance report to December 2019. And can I remind you again that if you have any comments on exempt appendices B and C, they should be left to the exempt part of the meeting at the end. So we're only discussing the bits without the appendices. So could I ask Richard Simpson to introduce the report, who is the Director of Finance and Resources?
Good evening. Thanks, Chair. Firstly, just to point out that a number of you might have noticed that the report has quarterly investment performance to December 2019. It should be, of course, quarterly investment performance to March 2020. So the title, and then in 1.1 it refers to the quarter ending 31st of December, and that should be the 31st of March 2020, and all the figures and the appendix from our advisors Hyman's represents the 31st of March 2020. So I'll ask David to come in a second to talk through Appendix A, which sets out the performance of the fund in a lot more detail. Clearly, it was a challenging quarter and a particularly challenging last 2 weeks to the quarter. And you'll see from 4.1 on page 14, the fund decreased in value by 9.8% during that quarter. Now, it will have made some of that back up in the quarter to date we're in. And again, David may touch on the changes in the markets in April and May, as well as in March. I think the key point I wanted to make to the committee that I'm sure you'll be aware of as well is, although clearly it's disappointing for all pension funds to see that kind of impact on the market, we are a long-term fund. So ups and downs over quarters are something we accept. So we're looking for, what's important to us is our long-term return rather than performance over a particular quarter. And clearly over the last, if you look back over the last 5 years, we've had good returns as a fund. So I think the important thing to say is one quarter's performance is not a time to panic, but we have asked Hyman's to do a bit of a review of our previous discussions around our strategy, and that's picked up in our paper as well, just to check if there's anything from the current market position that would cause us to change our long-term and medium-term strategy. So that's what I wanted to say by introduction, Chair. If you're okay, I'll hand over to David Walker from Hyman's just to add some more detail on the performance of the fund.
That's fine. If David'd like to come in here, please.
Okay. Good evening, everyone. So if you turn to the, I think it's the open colour supplement, or the colour supplement anyway, we have the quarterly performance report to end of March. As Richard said, the numbers would look very different if it was the end December report to end March, and clearly the market has kind of reflected the impact of COVID-19 and the outlook for global markets. So on page 2 of the report, it gives the market background, and what you'll see there is on the kind of left-hand side, the bars show the performance of equity markets. So global equities down nearly 16%, the UK down even further, 25%, with also the impact of currency movements and countering some of the global performance. Clearly, on the other side of that, the performance of bonds, with falling bond yields, you saw positive returns from gilts, but corporate bonds, again, with corporate bond spreads, the concerns about company defaults, negative returns from corporate bonds. I'd say property, there's a kind of small negative return, but I think the property returns are still kind of masked slightly in terms of actual visibility of valuations and any transactional activity. The charts on the bottom of page 2 also show the difference from the sectors, and clearly oil and gas performance was one of the big negatives, with the issues over the kind of price war between Russia and Saudi Arabia over the period, significantly impacting the oil price. On the following page, we show some of the movements in bond yields and currencies. I think the one chart to note is the kind of bottom left, the gilt yields chart, because your pension liabilities will generally also move to some extent in line with what's happening with bond yields. So kind of falling yields means rising values of your pension liabilities. And what you see there is, a kind of steady fall over the period, and then significant volatility towards the end of the quarter. In fact, a big sharp rise in yields for a short period. And part of that was stemming from really a kind of lack of liquidity in the market, and a lot of people being forced to sell gilts as a kind of source of liquidity. But that kind of sharply fell away again, and recovered a little towards the quarter end. So the impact of that on your fund is shown on page 4. As Richard said, the assets down just almost 10% for the quarter, and about 2.5% behind your benchmark. And I'll go into the reasons for that in a second. That puts 12 months returns also negative, but given the volatility that we've seen, only around about 3% down from where you were kind of 12 months ago. But still the kind of relative performance a bit behind as well. Kind of longer term numbers are still positive in absolute terms. So in terms of where your asset allocation was, you can see that the relative positioning is still kind of overweight to Harding Loevner, one of your equity managers, and they performed relatively well over the recent period, whereas Schroders, your value equity manager, has continued to struggle and is a little bit underweight. And similarly, we've been persistently underweight the diversified growth mandates, both of which underperformed over the recent period. So delving more into performance on the following page, so page 6 of the supplement, you can see some of those relative performance numbers, and the standouts there. I say very strong positive relative numbers from Harding Loevner and Newton within equities. Schroders with their value style struggling in the period of volatility, as they have been for some time now. The diversified growth managers, they're measured against kind of cash plus benchmarks. So it's clearly a tough benchmark in times of volatility. And Baillie Gifford's mandate is a bit more diversified, but is spread across a range of risk assets. And risk assets did sell off pretty indiscriminately over the period, and therefore they were down about 15% relative. Purford, your other diversified growth managers, still down, but not by a significant amount, with their more defensively positioned mandate, which is really focused on kind of equities, bonds, and cash. I see property, I think it's a bit cautious in terms of the reliance on some of the numbers you see there. There was very little transactional activity, and some of the pricing of pooled funds has been a bit stale. So it's still kind of hard to tell in terms of where they'll come out. And I think different managers were taking different approaches to pricing. But I would expect that to see potential further falls in property markets and the performance as that comes through over the next quarter. The positives, though, were the infrastructure assets holding up well, although I would note again that there's a bit of a lag in the pricing of some of those mandates. So I expect to see some further kind of developments in the pricing coming through. And then the positive performance of the index-linked gilts. I think one thing I would note, and Richard said I might comment on, where what's happened since. So actually markets have rallied reasonably strongly since the end of the last quarter. And in fact, UK equities up to the end of last week were up just shy of 16% for the quarter. And in fact, US equity markets or global markets were up in excess of 20% over the kind of quarter to the end of last week. And I think that's quite staggering. As Richard said, you can take a longer term view, but actually US equity markets are now up over since the start of this year. A lot of that was kind of bolstered by some of the fiscal and monetary policy movements made by governments around the world, kind of providing support, particularly in the credit markets, and that has helped to kind of bolster the markets. I say the outlook is still quite uncertain, and would still expect a lot of volatility, but there has been quite a sharp recovery over in markets and valuations, certainly over the period up to the end of last week. In terms of manager specifics, I said, I think during this period, the equity strategies which have done well over the last few years have been kind of quality growth focused managers, and that's been the same over this recent period. So Harding Loevner, who are quality growth, outperformed. Newton, more defensive thematic manager, also outperformed, whereas value as a style has struggled, and that's reflected by Schroders' negative relative performance over the period. Say diversified growth on page 8. I say Baillie Gifford, although it's diversified, it is spread across a lot of different risk assets, and with everything selling off, they did struggle. So it's a kind of negative performance over the period, but some of that will have come back with the recovery that we've seen in the more recent period. Similarly, I said on Purford, negative performance for the quarter, and they have shifted their allocation slightly. So they have been quite defensively positioned, and they've used this opportunity to move back into equity markets and reduce some of their defensive positions within bonds and cash. So that should come through in the next quarter. I say the property performance is there, but I would say there's notable caution there given the lack of pricing and transactional activity. So those were probably the main points. Oh, so one other point was M&G, their alpha opportunities. So this is your kind of diversified multi-asset credit mandate. And again, that was impacted by the sell-off in credit generally, but particularly in sub-investment grade markets, kind of loans and high yield, both selling off. And therefore they were down kind of over nearly 8% over the quarter. But that is kind of broadly reflective of what happened in the underlying markets in which they invest. So those were probably the key points I wanted to bring out, Chair, and happy to take any questions.
It's good to see the markets have rallied round, and I think the overall picture is that we were aware of the ones that were good performers, the ones less good. Do we now have some questions from members on that report? Yes, I see we have one from Councillor Sadiq, if you'd like to ask your question.
Emerging markets, how are they performing now? Are they still going down, or your trend is going up now? Thanks.
Yeah, so on equities, they've broadly been similar to what's happened in the other equity markets. Haven't recovered quite as strongly as the US, but So for Q1, emerging market equities were down about 20% overall, but they've come back, and I say end of last week, they were back up by nearly 17%. So still a bit down over the year, but been recovering strongly over the recent period.
Any other questions?
Thank you.
No other questions? In that case, can we move on to the recommendations, which are to note the performance of the total fund and the performance of individual fund managers against their benchmarks and targets, and to note the recommendations of Hymans Robertson that the existing investment strategy remains appropriate despite the impact of COVID-19 on asset values, and agree that no rebalancing is required. So
Chair, sorry, Chair, to interrupt. I think we might have to come back to recommendation 2.2 in the closed part of the agenda, just because that appendix is only in the closed part, the appendix around COVID impact.
Okay, in that case, can we just agree to note recommendation 2.1? Can you write that in the chat function that you note? Okay, that's fine, everyone's noted. In that case, can we move on to item 7, which is the responsible investment policy? And can I call on Richard and David, or is it Tamara, to introduce this?
It's me, Chair. It's Tamara Bennell, the interim head of pension investments. So if we look at page 17 in the open agenda pack, the report is fairly brief here. You considered the responsible investment policy at your last meeting and approved the version presented there. However, you asked that we also incorporate some of the work you'd already started last June, looking at carbon risk and climate change in particular. So the paper, the revised responsible investment policy paper presented here has just been updated to incorporate those changes around climate change. Specifically, we've proposed to include 2 additional investment beliefs. So noting that the committee would like to take a proactive approach to responsible investment and climate change, and also to reflect the belief of the committee that those companies which engage successfully on sustainability issues and transition to a low carbon economy will actually be more successful financially, and that therefore this strategy should be also a successful financial strategy. And then we've added some specific actions that the committee might wish to consider when looking at its actual investments and its investment mandates. So those are presented as a menu of options, really. We can't be too specific in the policy document itself, because obviously some actions will not be appropriate for certain asset classes. So it will be asset class and mandate specific. But the intention is that these considerations will then inform some of the decisions you take on your investment strategy, which we're going to be discussing later at item 10. The recommendations specifically focus on 4 key areas. So the monitoring of carbon exposure and carbon risk, engaging with other investors, so taking a collective approach to trying to push for change in this area, the extent to which you want to challenge and probe your fund managers and the London Civ on their approach to sustainability and climate change. And finally, considering as part of your investment strategy review whether you want to take to push for some mandates which have an explicit sustainability mandate. I think that's everything that we propose to include in the responsible investment policy. Happy to take any questions.
Do we have some questions from members, please? If you can write in the chat box. We've spent quite a lot of time and effort developing our responsible investment policy over the last year, and including the climate policy. And I think we've come to a very satisfactory conclusion of the direction in which we wish to go. Just one item, we've talked about investigating the merits of joining an institutional investor collective action group on climate change. I attended an online seminar during the week, which was given by Climate Action 100. I think they're part of PRRC, and I think that the Local Authority Pension Fund Forum, that's one of the organisations they recommend. So I don't know whether we can have a look at whether that's feasible either individually or as part of a greater group or as part of the CIV, to have a look at that. But do we have any other questions on our final responsible investment policy and the climate part of it? If you can write in the chat function, please. So far, no comments. Yes, Councillor Weatherlake has a comment.
Yes, thank you, Chair. And it is more of a comment than a question, I have to admit. But on page 26, objectives for climate change policy. The first one is a reference, is a statement that it is inappropriate for investors to hold assets which materially contribute to or allow them to benefit financially from climate change. I think this is a difficult one because if you consider the case of, for instance, lithium mines for batteries, or even steel or cement for producing materials needed to build windmills, I don't think realistically that it's possible to separate out completely, even from extractive industries. They still are necessary even to support work towards renewable technologies. So just an observation there that an element of realism perhaps on what we can do.
Thanks for that. I think one of the issues that the Local Authority Pension Fund Forum, for example, have been looking at have been the traditional extractive industries like coal, and also things like oil and increasingly gas. And as we saw, these were the ones that probably performed the worst in the market downturn. So I think it's more the traditional industries that there's a current focus on. But I don't know whether Tamara would like to add to that.
Apologies, I have a vomiting child here. I might have to excuse myself for a couple of minutes.
Yeah, go for it, Tamara. I think, Chair, if I come in, I think, as you say, that's more the focus. It isn't a perfect science, I suppose, is the answer, in terms of having a set of beliefs is to try and move us in a direction, rather than kind of throw everything up in the air overnight, and to give us some beliefs as we go into any changes we might make to fund managers in the future, or in conversations with the London Civ as well, so they're aware of our kind of general beliefs as a fund, so they can ensure they select managers that can appropriately support those beliefs.
Okay, thank you.
Chair, would you like me to add anything on that?
Yes, would you like to have a few words, David?
Yes, so the kind of supporting paper that we've also included from kind of page 21 is really trying to give some backing to the points that have then been suggested or put into the responsible investment policy itself, really to remind you of the background to what responsible investment is, where it sits, but also kind of your responsibilities as part of the pensions committee and a steward of the pension fund. So really, it really goes back to that, Councillor, in terms of reminding you what's possible, the extent to which you can take into account both financial and non-financial factors, some of the risks and opportunities posed specifically by climate change risk, and then we've outlined your current approach, which I think you do quite a lot already, But that's when it then goes on to some of the suggestions as what you might do. And again, when we come to the strategy item later on in the agenda, this again can reflect back to some of the proposals here in terms of the climate related objectives and the amendments to the beliefs. So I think this is all practical. As you say though, there's no kind of clear answer here. It's about, I think, just trying to improve what you do and make sure you had these discussions. And I think it's positive that the committee has been looking to engage on these issues and try and expand what your thinking is on responsible investment, including climate change risk. So hopefully that supporting paper gives some additional background to then arrive at those proposed amendments to the responsible investment policy, and it includes some of those industry initiatives on climate change. And apologies that we missed out on Climate 100. That wasn't one of the ones that we covered, Chair, but clearly there's a lot of options for you in terms of what you might do going forward. And I say we'll come back to that in the strategy review item.
Thank you. As you say, it is a direction of travel, so we're probably not going to change the world overnight, but we're doing it incrementally. Welcome back tomorrow. I hope you've managed to sort your issues out. If you need to leave any statement, do let us know. I know it's very difficult in the current circumstances. I don't know whether you want to have a word on the responsible investment policy before we move on.
I don't think I had anything further to add on this. I think we probably need to give some thought to the extent to which we want to publicise and publish what we are doing, and to what extent we want to be sort of held accountable for what we're doing in this area. But again, I don't think that's something that we need to make hasty decisions on. I think that can evolve over time, would be my recommendation.
Yes, I think we have a recommendation for this item, which we can take. If there's no other questions, we can move on to the recommendations. Do we have any other questions? Can I ask first of all? No, in that case, can we move on to the recommendations, and we'll take the suggested additional recommendations. And the recommendations, as I try and find it, 2.1 to agree the revised responsible investment policy attached at Appendix A, specifically the two final bullet points on page 1 referring to beliefs and approach to climate change, and the section on page 3 relating to climate change actions. I will take that first of all. So can you put in the chat box that you agree the recommendation 2.1 on page 17, members? Thank you. I'll now move on to a suggested second recommendation. It's been brought to our attention that it's actually good practice to get the say-so and support of our other pension colleagues. So on that basis, I suggest that we move another recommendation. I will move it, and I will hope there will be someone who can second it, that the committee will consult with relevant stakeholders, such as the Pensions Board and employers, on the revised responsible investment policy. First of all, would anyone like to say anything on that or suggest any changes to that? And do you agree with that? Would anyone like to make any comments on that? I wonder whether the officer would like to comment on that first of all.
I think, Chair, it's particularly relevant to other. The fund isn't just about the council. Obviously, we've got other employers in the fund as well. So I think it's particularly relevant just to engage with those other employers in the fund and recipients of the pension fund, if we can find a way to do that, just to update them on the rationale for this and why we think it's the right thing for the fund. So we'll find if the recommendation's agreed, we'll find a way of doing that with the support of the pension board as well, who have obviously got representation from some of those stakeholders.
Thank you. Do we have any comments from members about consultation with relevant stakeholders? In that case, are you happy to support the motion? And can I have a councillor to second the motion? And I'll read it again, that the committee will consult with relevant stakeholders, such as the pension board and employers, on the revised responsible investment policy. Do I have a seconder, please? Okay, Councillor Sadiq is willing to second it. In that case, can we vote on that recommendation? Can you put in the chat box that you support the second recommendation? Thank you, everyone's in support of that. Thank you very much indeed. So I'm really glad that we've sorted out responsible investment policy. That's really an achievement. Can we now move on to the next issue on the agenda? That was item 7. We now want to move on to item 8. Which is the review of the work programme. That's on page 21 of the agenda. Could I ask Tamara to introduce that, please?
Thank you, Chair. So this report is in the same format as you've previously received the work programmes at your meetings. We aim to set out an approximate programme of work as far as it can be predicted in advance for the next year. I would note that some of the items that we had previously agreed to consider at this meeting and subsequent meetings have been postponed, in some cases indefinitely, and that's not from our side. That's that the various regulatory bodies and industry bodies have postponed some of their consultations due to COVID-19. So, for example, the Good Governance Review, they published the Phase 2 paper and were due to publish a Phase 3 paper later this year. They've now said that that process will be stood down for now. That has disappeared from the upcoming agenda for this year. Otherwise, key points to note, we're proposing to reduce the frequency of the detailed pensions administration reports that come to the committee from quarterly to just twice a year. We will continue to present detailed reports every quarter to the pension board, but it's proposed that the pension committee only receives a pensions admin report twice a year. I'm just trying to see if there's any other significant changes. And then worth noting that there's been a very significant change in personnel at the London Civ. So they've got a new chief investment officer starting, they've got a new head of responsible investment starting, and they've just started as a new head of client relations. So we're very keen to get those people in to present to the committee as soon as they're in post. Obviously, we can't commit their time in advance of them actually starting their new roles, but as soon as they're up and running in their new roles, we will look to get them to come and talk to you at one of your next meetings. Otherwise, I think the work programme is pretty much as expected.
Well, there's a question from Councillor Mohammed Sadiq.
Tamara, why have you decided to bring this report to us every 6 months instead of every 3 months? Thanks.
I think the rationale was primarily to allow this committee to focus on the key investment decisions that it needs to make, and then allow the board to play the bigger role in scrutinising the details of pension administration. I don't know, Richard, if you've got anything you want to add to that.
Thanks, Tamara. No, I think broadly that's right. I think the administration report can be quite operational, I suppose, in some of the issues, and from quarter to quarter, I wouldn't say there was major changes that needed the committee's approval. It's generally for noting. So if something major had happened in between the two half-year reports, we would still be able to bring an admin report to the committee if we felt like a decision was made. But I think if we're just noting those reports, it's just keeping the committee aware of kind of progress around things, but not necessarily getting into the operational details around administration. And as Tamara says, being able to focus on other items as well.
Sorry, Chair, can I come in?
Yes, John, go on, have a follow-up.
Thank you. Richard, is that a decision which we have to approve, or is that a decision which is decided by the officers?
It's very much up to you. I wouldn't want to make decisions on behalf of the committee. It's a proposal around kind of where we think it might be best to spend the committee's time. But if you want an admin report at each committee, David can continue to provide an admin report to the committee.
I would say as chair, and having also attended the pensions board, that it is really more of a pension board matter. And I think going to twice a year, in my view, is adequate, but perhaps other members of the committee would like to say. I think Councillor Pramnanda has a question on this.
Yes, recently you just asked us to complete the questionnaire skills, and which I have done so. And some of the areas I'm going to be lacking is the Regulatory Act and also the policies as well. So to brush it up and catch it up, is there any training due to take place, or is there some sort of tools where we can access onto it? Thank you.
Can I come in on that, Chair?
Yes, certainly. Do by all means.
So firstly, thank you very much for completing the survey. I know it's quite time consuming to complete, but it's very helpful. And the more responses we get across both the Pension Committee and the Pension Board, the more able we are to identify where the two groups as a whole might have training needs, and therefore be able to put together a training plan that makes sense for both groups. Just like to emphasise that the assessment was very much intended to be a collective skills mapping rather than a test of people's individual knowledge. It's definitely recognised that not every individual is going to be an expert in every single life, nor would we want them to be. The important thing is that the group as a whole has sufficient skills in all of these areas to be able to probe and challenge and make decisions effectively. So as soon as we have the responses from everybody, we'll be producing a collated report across the board and the committee, highlighting where those skills gaps might be, and then proposing priorities for training going forward. If you do have specific requests for items of training that you'd like me to look into, I can certainly see what I can dig out for you in the meantime. But the plan is that once we've got this collective response together, it'll become clear to all of us where those training needs are, and then we can all together agree a more formalised training plan going forward.
Thank you. Do we have any other questions on training? No? In that case, can we agree the proposed work programme? Can you put in the chat function that you agree to it, please? Thank you very much. In that case, I think we can move on to item 9 on the agenda, and that is the amendment to the funding strategy statement. And I think this is another one for Tamara.
It is indeed. So you recently approved the funding strategy statement after the most recent triennial valuation process. Unfortunately, there was a change in regulations shortly after that, and new regulations have come in on exit credits for employers leaving the scheme. And so we need to reflect those changed regulations in the funding strategy statement. And that's why a revised version of the funding strategy statement is put to you in the pack. Very sort of at a very high level, this is quite a complex area, but when an employer leaves the scheme, if they're in surplus, they might be entitled to an exit credit. However, this will generally only be if they participated in risk while they were members of the scheme. So participating in risk means that they would have been liable to pay for any exit debt if they'd left the scheme while in deficit. And there's not, in practice, there doesn't tend to be very many employers that leave the scheme on that basis. So it's not envisaged to be a very significant practical issue in the immediate future, but obviously it's something we do need to reflect in the funding strategy statement. The new regulations do give the administering authority a fair degree of flexibility in determining how they will calculate exit credits and determine if any exit credit is due to be payable to an exiting employer. Probably the most difficult issue is what we would do if an employer challenged our decision, what the process would be. So initially, their recourse would be to the internal dispute resolution procedure. The current IDRP is drafted as very much as a member document, so for individuals and their individual pension entitlements. It's not really appropriate for use with a dispute with an employer. So when we took legal advice, it was suggested that we come up with an alternative IDRP that was more appropriate for employers. We're in the process of drafting that at the moment. But just to let you know that it is sort of in train and will be hopefully finalised in the near future. And one final point is that it's good practice to consult with employers on this, given it's a change that will affect them potentially. So we are proposing that we should make this revised funding strategy statement available to employers for them to review for a period of, say, 1 month before sort of signing off as the final version. Happy to take any questions. It is quite a complex area, though. I'm not sure how much detail we really need to go into on the actual policy itself. It's more about what processes we need to put in place to make sure we can deal with those situations.
Thank you very much, Tamara. Do we have any questions? As Tamara said, we did agree this at the last meeting, but the change in regulations came in after the meeting, so we're having to update it now. So it is just to make that one change on exit credits. Do we have any comments? No comments? In that case, can we agree the recommendations, which are on page 25, to approve the exit credit policy included within the funding strategy statement, subject to a 1-month consultation period with employers? If you agree with that, can you put in the chat box? Yes, thank you very much. Everyone agrees that. We now move on to later items on the agenda. I would just like to reorder the agenda and report that any urgent item 11 has no urgent items, so we can now go to the appendices and item 6 and to item 10, in which case I need to move a motion that the public and press be excluded from the meeting for the following item of business on the grounds that they involve the likely disclosure of exempt information as defined in paragraph 3, schedule 12A of the Local Government Act 1972. Please may I have a seconder for that motion? Could I have a seconder for the motion, please? Thank you. Councillor Edward Joyce has seconded the motion. And in that case, we would like to move on to the exempt session, and I'll wait for our IT support team to confirm that the live stream has been stopped before I proceed with this item of business. In the meantime, I'd like to thank members of the public who are watching this on YouTube for taking the time to join the meeting. Thank you. So we're just waiting for the stream to be stopped so we can go into exempt session. Right, the stream is stopped. We're now on exempt. So that means we can actually, first of all, go on to items, the appendices at 6 B and C. So I wonder whether Richard and David would like to make some comments on those now.
Thank you, Chair. I'll bring David in a second. So the recommendation we deferred under item 6